Hi, guys. My name is Matthew Preston, and welcome to the Limitless Podcast. Joining us, as always, is your co host, Dr. Thaon Simms. Hey, hello to people, Thaon.
Hey, guys. All go on.
And today we'll be just having a conversation, or I guess having like the age old debate about short term versus long term investing. A lot of people talk about this. There's the short term people who are like, hey, short term is better, or the people who are long term who are like, yo, our method is better. But we're just gonna give our thoughts. We're gonna talk about some of the pros and cons. We're gonna try to apply it to the JSC. We're gonna also try to even just apply it to our personal investment history and talk about maybe times that maybe reasons that I like long-term investing, reasons why I like short-term investing. And because I think at the end of the day, the real winner is likely a mix between both. But yeah, I guess we will see how this discussion goes. And you guys can always comment below, what is your preferred investing style, short-term versus long-term investing. Yeah. How are you feeling about this one, Thaon?
I agree with you on the point that you said where the real value lies in both, in like a mixture of both, like a hybrid kind of vibe. I mean, short-term investing, it's more like how would you describe this? Let's say you're going on a date. Actually, it's like speed dating. Yeah. Like it's exciting, yeah, it's fast-paced, but you may get burned if you move too fast. Right. Whereas, that long-term investing, that's like, I don't want to say like marriage, because, the aim is eventually to sell the stock. But it's like marriage, like you ride the highs, the lows, and you pray for compounding interest instead of counseling, So I think the true value kind of lies in the mixture with both, and understanding both definitely makes you a better investor. I think even the way I used to short-term trade has changed over the years, and now I barely ever short-term trade. And I'm now seeing the value in long-term trading and so on. So we can talk a bit more on the pros and cons of each.
Yeah. So I mean, I think the first thing to do would be to start off with, I guess, like a definition. So there are, I guess, different people have different definitions or criteria to say short-term investing. So when I was looking it up, some sources will say under 1 year, some sources will say under 3 years.
For short term.
Yeah. So it kind of, I guess, differs. So generally it's under a year to under 3 years in terms of an investment before you, I guess, realize it or you sell it to make your capital gains, or you buy it at $1, you sell it at $2, or you buy it at $1, you sell it at $1, or even worse, you buy it at $1, sell it at 50 cents. You can lose your money too. Versus long-term investing, as I said, would be over that time period. So if you're using a 1 year for definition for short-term investing, anything that you hold for over a year before you sell it would be considered long-term investing. But at the end of the day, as I said, depending on the source who you ask, they might have a different timeline. But the concept is whatever threshold you're using, 1 year, 3 years, whatever. We're just gonna say, okay, if it's under that time, short term, over that time is long term, right?
This is why there's a huge debate as well online, because the long term, like people say, people talk about long term and short term investing, but nobody really knows the timeline, and it's subjective because you say 1 year or 3 years, but I don't think you used to always think like that. Back in the day, you used to think that long term investing was like 6 months. Not true.
I think usually over a year,
or you'd call that medium term.
Would be considered long.
Back when you used to
no, I'd say
investing,
the definition I was introduced to was long term is over a year.
Okay.
When I just started, yeah.
But your personal long term, not just the definition, because as I said, investing is personal. So for you, is it a long hold? If you're holding it for a year, is that a long term buy for you?
It's not so simple, because for me, I guess at the end of the day, like the reason I hold something is that I buy it and I think it's undervalued. So I buy the stock at $1. I think it's a $5, $3 stock. And I think, there'll be a certain time period where, I think the market will see that or agree with me that it's a $3 stock, and then, buy it at $3 from me. So it's not just about the time, because if that happened, if I could see a stock right now that today we're recording, it's trading at $1, and I'm saying, in 1 week's time, I see something that would happen, that could happen, that could send it to $3, I'd buy it and then I'll just make it. But then there's times where maybe I can't find something that it's such a short time period. I'm like, okay, in 6 months, I think these events are going to happen. Or in 1 year, I think these events are going to happen. And then I think that will cause the stock to double, triple, whatever. Then I'll do that. It's not like I'm like, okay, it's like, it doesn't make, like, if you had a choice, two decisions in one play, and say they had, I guess, a similar amount of risk, why would you take longer to get the same amount of return if you could get it in the short amount of time? Risk could, I think, skew that, because you could say, okay, maybe the thing that could get it shorter would be more risky. But what if you can find a situation where both options, the risk is the same, the return is the same, but the time period is shorter? I would pick the one with the shorter time period. There's no,
I think everyone would agree with you there.
Yeah, so like, that's my whole thing with the short term versus long term. It's like, at the end of the day, I just see something, I'm like, okay, I think it's undervalued. What could make the markets reevaluate or see that value that I see? Okay, when are those things possibly going to happen? Have an idea of the timeline. And when it happens, it happens. It's not like, I guess that's kind of how I see it.
You touched on a risk for a bit, but I want to stay within the context of, understanding short and long-term investing. So just generally speaking, the question I asked you was really just, is it a long-term hold for you? Like, would you call it long-term investing if it's greater than a year? Even though that's just a lot of people's definition. Now, I mean, you didn't really answer the question, but that's fine. That's okay. You gave a more important answer, and you brought in risk. But there's some concepts I also want to bring up in terms of things like day trading, which is buying and selling stocks within the same day. You ever do day trading before?
Yeah, I have.
When was the last time you did day trading? And what stock was it?
Wow. Wow. I don't know. That was probably over 2-3 years ago. Can't really even. I'm trying to even think of the stock. Can't
I
really
remember
remember.
mine. I remember mine very clearly, and I'll never forget it because it's the last time I ever day traded. This was Fesco, and I remember it because I hope this is gonna be a hilarious story, because I hope Dr. Dale doesn't look at this episode. But there was a time I was at health center, so this would have been 20. So as doctors, we work at health center. This was primary healthcare. So it's 2022, because at the end of 2020 to 2021 was, when we were just thrust into COVID and we were on the wards, and COVID was like a big scare. 2021, 2022 was senior house officer for me. So we went, you rotate through, different surgical specialties. I did orthopedics and urology, and then I did health center. So this was like, mid 2022. And I remember there was an Isle of Soka I went to. Never forget this. And I drove back to Mandeville after, but I was exhausted. Oh, I was planning to actually call in sick before. Well, I was planning to take the DL, just to take the day, because I knew, just the commute from Kingston to Mandeville at that time, before the highway, I was just like, yo, man, I take the day off. So I took the day off. I reached to Mandeville, I pulled up JTrader. I was also kind of hungover, but I pulled up JTrader and I bought Fesco at the start of the day. I'll never forget that. And within the day, it was I don't know. It was, I can probably find the trade in my JTrader, but I remember making 20% in the day. Like within the day, it was almost 20%. I think it was like 18%. And I remember the amount was It was a good amount. It was over like 50 grand JMD I made. And then
Wait,
I was saying to
profits?
myself, profit, profit, profit. This is
Oh,
after
well,
fees.
the people can
After,
work
yeah.
out how much you put in, then you know.
It was a decent amount still because I was just like, I saw an opportunity. The stock was falling, but the queue was like wide open. So between
What
the,
was going on then? Exactly with
I,
it?
I can't even remember exactly what was going on. But it was very volatile. I could tell the stock was very volatile. And something I used to do when I used to day trade that was my strategy personally. You know, I did the same thing with Cygnus during the pandemic, where I'd buy and sell Cygnus, you know, at $15 and $16. Like there was this
Mm-hmm.
huge gap in the queue
Mm-hmm.
between the best ask
Mm-hmm.
and best bid. So you see a huge gap, and I
Mm-hmm.
buy at the low and sell at the high within the day. And
Mm-hmm.
I remember making like lunch money every single day during the pandemic for Cygnus. It was more than
Mm-hmm.
lunch money. I was making like 5 grand a day, um maybe like 2 3 times a week, day
Mm-hmm.
trading during the pandemic. And sometimes, you know, you get stuck for a couple of days and so on, but
Mm-hmm.
you know, I would usually get out. And the same thing happened with Fesco that day, but this time, you know, I just started working, so I could put decent money in that.
Mm-hmm.
And boy, when I realized that, I'm like, yo, why am I going to work when I can make almost 60 grand in a day?
Mm-hmm.
It was hilarious to me. And so, you know, that was the last time I ever day traded though, because I just never had the time after that.
Mm-hmm.
Um, and the risk with certain things, you know, like you just don't have the time to be able to sit down and look at the cues. And then you have to also know
Mm-hmm.
the rules to day trade. Because if you want to get in beforehand, you know, if you want to get in the pre-open at that time,
Mm-hmm.
which was at that time it was between 9 and 9:30.
Mm-hmm.
So you have to know how to put in your order. You have to know what to calculate. There's a whole
The
book,
different types of
and
orders.
the different types of orders. There's a whole book, the
Yeah.
automated trading rules, which I used
Mm-hmm.
to know. I still know some of them, but not as well as back then because
Mm-hmm.
I no longer trade like that anymore. But if you are going to do things like that, please read
Mm-hmm.
the rule book. Trust me, please read the rule book. Um, but yeah, at that point, I was just like, yo, I'm ready to quit my job because, hey, yo, man, I make money. But I was just like, I want off too. But that was the
Mm-hmm.
last time. Last time I day traded. I sold same day. And when I saw the
Mm-hmm.
profit, I I don't know, man. I called my parents. I'm like, yo, when did this risky thing boy pay off? Yo, look on this. Yeah.
Mm-hmm.
Damn.
Mm-hmm. Okay, I get you. I was
Mm-hmm.
just thinking about maybe the last time was around, I think it was one of the days of like the dollar when it had just IPO'd.
Mm-hmm.
Like maybe I had bought, I don't know, day 2 or day 3 and sold the next day.
Oh yeah.
I
We
guess
got
that
in
would,
early.
yeah. So I think I'd applied to the IPO, got shares, bought more in the
Mm-hmm.
open market after, and then sold.
But you got in, you and Shaq got in early for dollar. I remember the price. It was 181 or something like that. You guys got in,
No,
and
that
you guys
doesn't
got in at
sound right.
230 something. No, I'm pretty sure. No, Shaq probably got in before you.
180 doesn't sound, off the top of my head, I don't think that's one of the days.
I feel like I don't know. One of those that price is just. I remember us speaking about
I
it,
think it was like
and
228 or 232 off the
yeah,
top of my head.
228. I got in at 232, but you guys got in before that. I'm pretty sure it's like 180. One of you guys got in at. I don't know.
Hmm.
Maybe not you, but
I don't think that's one
no,
of the
I'm pretty sure it was
prices.
you and Shaq. Hmm?
No, as in I'm not saying that we didn't get in. I'm just saying that I don't think that's like the number you're saying. I don't think that's one of the prices
I'd have to
off the top.
recalculate it
Yeah, yeah. I mean, I
based
get
on
your
the
point though. I get your
reference
point.
price.
Yeah, I'd have to. I think I have
Yeah.
it in my Excel and stuff.
Mm-hmm.
Yeah,
Wow.
but
Yeah.
yeah, but in terms of just going back to the whole short term versus long term in terms of, I guess, some of the, like, I guess, tactics or things, like, for example, if you're like in terms of short term, I guess there's lots of different types of short term strategies. I mean, some of the things could be like when, say, something bad happens. So there's some, bad news, there's a
Mm-hmm.
fire, there's someone has passed away, those kind of stuff. Like the news initially hits the market, and then if people think it causes a lot of uncertainty about the business, people just want to sell their shares. I guess a good example would be the whole Dolphin Cove parent company bankruptcy. I guess that created a short-term investing opportunity in terms of like on the negative side of news. So it's like, okay, the market is almost like, I guess you'd say, oh, the stock is oversold. So it's almost like, okay, something bad has happened. Sometimes it could be that something bad has happened, or something that people think is bad, but it wouldn't actually affect the business. Or it is bad for the business, but it's not as bad as the market is saying. So it's like, okay, the stock is dropping 50%, but maybe it only really should drop 10-20% in terms of like how much maybe revenue or profit the business may lose. Like, oh, they had a contract, they lost a contract. But oh, the company isn't dead. It still has other contracts. It still has the possibility to make other money. So then there's that kind of short-term investing where, okay, you buy and then you sell when the market kind of recovers and catches up, and they're like, wait, it's not that bad, or wait, they just posted a record profits, or they just declared a dividend or something like that. And then there's the other side, I guess, too, where, okay, there's good news, and it's almost like it's really good, but say it's 50%, it's a percentage good where it like should cause the stock to almost double or move up 50%, but the market only initially moves it up 10-20%. So then you could buy in at the 20% high and sell as more information, it starts more and more news outlets, and more it reaches more people. So you're one of the early buyers, you're moving on it quickly. So there's those different strategies. But then, the benefits of, I guess, long-term investing is that, I guess things like that you may not necessarily have to care about at all. Or you could even apply that with long-term investing. That could be a benefit for you, because you could say, wait, I'm a long-term investor. I'm going to be in this company for the rest of my life, or for like the next 5-10 years, giving me dividends, giving me capital gains. When those things happen, you could capitalize on it. So for example, the bad thing happens, the stock drops, you could just buy more if you had cash. Or say something good happens and you think the market is almost like overreacting, so it's like it's sending it up, doubling, but you're like, yo, this should only maybe cause it to move 50%. I could sell some, and then when the market kind of catches back and then calms down, you could then buy back in at a cheaper price. So you sell at like $2, you buy back in at 180, 150.
True.
So then once again, because is that a long-term investor then? So if say for example you buy now and you're planning to hold for 5 years, you sell 10% of your holdings at a much higher price, and it drops back, you buy back in, and you hold it for another 5 years. Are you not a long-term investor because you did that?
Sold some?
Yeah, does that make you not a long-term investor? So you have to sell all of it for you to break the long-term investing? That's what I said. How do you, it's almost like, I remember the good analogy I was given was that if you're driving in a car, so the car be representing your investment vehicle, and you see a big pothole on the road, right? Say you're in a taxi man doesn't see the pothole, you're like, yo, I don't want to go in that pothole with him. Like, you can just leave the car. Like, you don't have to, or he's going in a road that you don't like, you don't have to stay in it. Like, you can, if you see a drop coming, and you could say, it's almost like we made the example about the Trans Jam offer for sale when that came out. Think about it. You could have sold, most retail investors would have actually been, if you had sold when you initially, like a few days after the Prime Minister first announced they're going to be offering their shares up for sale, you could have sold and then bought back into the offer. So you could have sold at like $4 and then bought back in at $3.60. So you would have more units. So if your goal as a long-term investor is to have more units in the company, that would help you to get to your goal. So because you did that, you're a scum. Oh no, he's a short-term investor. He should have just held it, like, and then been down 50-30%, or not 50, like not that much, but like down 20%. Like, I don't know. Like, what do you think?
Well, the Trans Jam offer for sale is a good example, simply because there are a lot of people that probably maybe are watchers actually hold Trans Jam and so on, and I also held Trans Jam as well, but seeing that, I found that a quick exit, seeing the offer for sale, knowing there's increased supply, knowing the price will probably fall, I said, okay, let's exit now. But I still do like the company. Like, imagine if I'm a long-term investor now and saying, yo, I do like this stock, and I want to hold it for the long run.
Mm-hmm.
I think it's still a long-term strategy to be able to exit at a certain point and buy back in, because
Mm-hmm.
you want this company. There's nothing wrong with the company fundamentally,
Mm-hmm.
but you see that, yes, there's an opportunity to get more shares. So
Mm-hmm.
I'm selling at this higher price so that I can use this money to buy back in again. Now,
Mm-hmm.
I haven't bought back in, but, well, as of today, you guys don't know when I'll buy back in, but um if I were a long-term TransJab, stockholder, etc., I don't see
Mm-hmm.
anything. You see, there's something you said on the podcast about your strategy, your personal investment strategy. And it's the same with me, because we both invest for the long term. But our
Mm-hmm.
long term is comprised of a series of short-term investments.
Mm-hmm.
And I think you have to use those kind of short-term strategies in order to maximize your long-term gains. So even for Transjam, exiting Transjam at a high price to buy back in at a lower price means you'll therefore get more units. One, you'll probably get more dividends because you hold more units, and if they pay the same, dividend per share, that's opportunity for you to get more dividends. And
Mm-hmm.
you hold more. You've missed out on making a loss of a certain amount of money, and now you own more of the company.
Mm-hmm.
So is it long term? I don't really have an answer to that, but if you guys are pressing me for an answer, my answer is yes. Because you still believe in the company. It's still a long term vision for you. You just did a quick short term thing, but you're still
Mm-hmm.
holding it for the long run, because you just saw this opportunity. Just like you see an opportunity to buy. Like, suppose I was somebody else, I could DCA it and continuously buy, but I could sell and buy, because I see an opportunity here. So there is some, it's difficult to, I guess you guys fully appreciate what I'm saying. Some of you guys may fully appreciate what I'm saying. Others may think that that's not, long term, that's still short term, and that's fine. Right? I may not agree with you, but as we said, the
Mm-hmm.
sweet spot is a mixture of long term and short term investing, because there are good short term strategies. Most definitely, there are good short term strategies
Mm-hmm. Because like
out
even with
there.
the example, I was thinking about, I should probably pull up some charts. Think about something. There's like some stocks that I've looked at, and the price I sold it at, which could have been like years ago. It has
Mm-hmm.
not gone anywhere near that price. So, okay, a good example, I always tell
I
this story
feel like I
about
know which one you're
Mailpac.
gonna say.
That's a good
Go on.
example.
Not what I thought you were
Because
gonna say.
I think about it, Mailpac, I had bought it, I think like November 2020. It was like $2 or so, right?
Mm-hmm.
I'll never forget that, buying it at like $2. I remember talking to one of my brethren, and he was like telling me, no, I'm buying it too early and I'm buying it too high or stuff like that. Him say, oh, go buy it closer to the time. Then the stock went up to as high as like $4 or so. I think I sold like maybe 360 or something like that.
Yeah.
And think about that. That was 2021, February 2021. We're recording it's now May 2025, right? Like years
Yeah.
later,
Mm-hmm.
they've acquired the second largest courier company in Jamaica. And the price, as we're recording today, is $2.55. I mean, they've given out, I guess, some dividends since. But I look at something like that and I'm like, hey, there was a time where the business was experiencing, phenomenal growth. COVID had happened. You couldn't travel. People were shipping a lot more. So they were one of the companies that was actually growing heavily because of that. And so the
Mm-hmm.
market valued it very highly. The market loved the stock, sent it to ridiculous, well, not ridiculous, but sent it to really high prices. And then now look at this. I sold all my units and I could still buy back in cheaper many, many, many years later. I think of Tropical. I think Tropical, when I look back at this, I got out like at the peak. Like there's not many stocks where I get out basically at the peak. I sold, I think the day before the report came out at like $3. And think about this, that was like early 2022. It's now
Mm-hmm.
2025, 3 years later. The stock is still well below that price that I sold it at, I could sell all my units at 3 and buy back in at 2. Think about CPJ. Think about
CPJ
that.
was a good one.
CPJ, I didn't even sell CPJ at the peak. I think CPJ went up to like 20 plus. I think I sold at maybe like 16. It's now $8. Think about that. I bought it at like, I don't know, my average price was like $6 or $7. Sold it at like $16. And it's
I
now
think it peaked at
half the
25.
price. Yeah. It's like now half, $25.99. Yeah. It's now half that price. How many years later? You know, I'm sure there's other stocks that you can look at. Like, so, you know, so say for example, I was a long-term investor. I could have bought it at 7, seen it double, triple, whatever, and just said, no, I'm not going to sell it. I'm married this stock. I'm going to stay with it no matter what. Or should I be like, hey, there will be times where you're like, hey, I don't think the stock is worth this amount. The market really loves it. It sends it up to crazy prices. I think I should sell this because this don't make sense. You can sell and then buy back in, you know? So I wouldn't be like, oh, I'm a long-term investor. Buffett says never sell a stock. You know, I'm going to follow him. You know, no, like if someone comes to you with a price that you think like, you're like, hey, this company is $1. I think it's worth $1. And then someone is telling you they want to buy it at $10. Why would you not take that? You know,
Unless
especially
you're
in a situation,
married to it.
well, there are caveats to it. So, for example, if you're moving a certain level of money, you can't, you know, just easily buy and sell it. So if you're like a fund that has billions or millions of US in a stock, you can't just sell it and buy back in. But my point is, like, for example, as a retail investor and most, you know, small investors and stuff, you can actually buy and sell the volumes you need quite easily.
True.
You know, most people, the amount of money you're investing, you could probably sell it and buy it back. So if you're thinking that, hey, this price doesn't make sense, there's going to likely be, I guess, a correction. It's overvalued. There's nothing wrong with selling. You know, I don't think you should say, oh no, but I said I'm going to hold it for 5 years. You'd be like, hey, I could sell it and buy it back. But once again, you have to apply that because, you know, some people can't, you know, sell it and buy back. But I don't know. I think about examples like that. Like there's examples, so many examples like that. There's when an APO comes out, if the stock is at $3, the APO is at $2 or $2.50. Why not sell at $3 and buy back in at $2.50 if you can? Because think about it, the level of volumes you can get in an APO is usually a lot of volumes. You can get millions of US in. So if once you're someone who works under those millions of US, if you could sell even piece of your money, you should, because that just makes logical sense. If I gave you a guarantee and I'm like, hey, I you know, if I gave you a guarantee that it could happen, you'd be like, hey, this makes logical sense. I should do it. But yeah,
I agree. I mean, some people will not, and hey, that's fine for them because that eases
there's
the
not
selling
necessarily
pressure.
wrong with that, I guess.
And there's and that's the thing. So it would all come down to, you know, why they bought the stock in the first place, what their lifestyle is like, those kind of things. Because we have people that, you know, we saw certain things happening with certain stocks. You know, we'll ask people, what do you think about a stock? Because we know they hold it. Like, for example, maybe even Transjam, or maybe Tropical with the SPO or the APO, or, you know, the additional or secondary, whatever the marketing is. It SPO? It's SPO. Yes. Like you could see that the stock is going to fall. Why not sell? And for us, if it were us, we would sell because we know exactly what's happening. We know, you know, this is the thing that happens repeatedly with secondary offers like an APO, right? Where you see the stock will fall to at least the price of the APO, if not below. So, and this has happened with several examples in the past. So you see it happening, you see an opportunity, why not sell? And some people say, you know, they just don't have time, they don't look at the market, those kind of stuff. But in my opinion, if it's your money, for me, if it's even 1,000 Jamaican dollars I have in this stock, I care so much about this stock, right? I am penny pinching, because penny pinching is what got me to this regular point now, where, you know, my portfolio isn't 10 grand, right? It's a little bit more than 10 grand. So, but you still have to be You know, you have to be looking at you have to be looking at your stocks, looking at the portfolio, looking at the market as well. I'm saying, yo, this is an objective decision that I have to make. And well, if you don't make that, well, that's just on you. Like, that's your investing style. Fine, cool.
Mm-hmm.
But I would say there's nothing wrong with selling, even if it is a long-term strategy. Because look at the stocks you pointed out, right? And I think it's so hard for persons with long-term um, investing styles. And when I'm talking long-term, I'm talking pretty long. Like, let's say you're buying a stock for the next. You see a stock that you like, and you say you're going to buy it for the next 10 years. All right. All
Mm-hmm.
of the stocks you were talking about, let's talk about like CPJ, right? You couldn't necessarily foresee, you know, CPJ being taken over and all of this. Or look at Mailpac, right? We just released an episode. You guys should watch that on Mailpac and, you know, Amazon and Amazon's free shipping that's possibly taking away revenues from Mailpac or so on.
Mm-hmm.
If you're buying Mailpac for 10 years, how are you going to foresee that Amazon is going to do that kind of stuff? Right. So I'm never the type to say, you know, married to this one stock or so on, because there must be a reason you bought the stock, and there must either be a reason you will sell the stock, whether it reaches a certain price, something changes in the company, etc. And it's hard for you to keep, like, you can't predict the future, but investing is making educated guesses about the future. And it's easier to make those guesses in the shorter term rather
Mm-hmm.
than in the next 3-6 months, rather than next 3-6 years.
Mm-hmm.
That's just that it's just much easier to make those kind of judgments.
Mm-hmm.
So for me, long-term investing, being married to a stock, for that, you know, that kind of long-term investing where people are
Mm-hmm.
married, they say, yo, no matter what, man, dash money on this stock, man, these say this. To me, it doesn't make
I
sense.
think that no matter what is the thing that you should be scared of in the statement you said, where so someone will say, oh, like, say you buy something and you're like, hey, I'm going to hold this for the next 5 years. There are certain reasons why you probably want to hold that. So you're like, okay, I believe that they have, you know, strong moat. Like, oh, competitors can't really, you know, easily compete with them. They have like a strong brand, they have a good product, they have good margins, good distribution, whatnot. That can change. So also, as a long-term investor, you shouldn't just say, hey, I don't care about the price, I'm not gonna check up on it. Like, you still have to do a lot of the things that you would do for a short term. Like, you still want to research it, make sure that the things that were true when you initially made the investment are still true now, because those can change. And then that's, I think, the issue sometimes, where you say, oh, but I've been holding, and it's like, I don't know, there's like a name for the phenomenon, like your sunk cost, I think sunk cost fallacy. So, oh, you've been holding it for 3 years, say your money hasn't moved for those 3 years, and you're just like, oh, you know, but I'm a long-term investor. Buffett says that, you know, you should be a long-term investor. Different people say you should be a long-term investor. You shouldn't care about those things. But what if things had changed in the business that, you know, change your goal? You could say, hey, yes, I'm a long-term investor, but this thing isn't going to get me where I need to go. I don't think this is giving me the kind of returns I need, unless, like, check up on it, say, okay, are there any things that could change, whatnot? And, you know, if you're not seeing anything like that, you've done your research, you shouldn't just stay in it because someone tells you to be a long-term investor, especially if you see another opportunity that, you know, could actually do better. Like, you actually have a much stronger conviction for that other opportunity. You shouldn't just say, hey, I'm just going to hold it on, you know. And I guess that's the thing, because once again, you could sell and then you could be wrong, and maybe this thing you're in actually would have got you there, but you just maybe have to kind of learn that and say, hey, what did I do wrong there? Let me try not to make that mistake again, and then, you know, go on and, yeah, just learn from that mistake.
100%, bro. There are even stocks now. I think we spoke about even something like a Jamaica broilers, right? Like, even on the podcast episode with Randy, and you know, broilers, great company. People will be like, yo, you know, Jamaicans will never stop eating chicken, and you can see it, like, every year or so on, you see a new chicken restaurant come out. Right? I think Churches is the latest edition that wants to come to Jamaica. We had Bird Shack recently. There's like Chester's fried chicken, there's KFC, there's
Mm-hmm.
so many, fast food restaurants that sell chicken. So
Mm-hmm.
you can look at it objectively and think, all right, and Jamaica also has a high population of Seventh Adventists, so they don't really eat pork, so you won't see many pork shacks, out there. Or also a bag of rastas and things. There's more chicken stuff. So we're a chicken consuming country.
Mm-hmm.
And you could say, oh, I'm going to be buying broilers now until thy kingdom come, because Jamaicans never going to stop eating chicken.
Mm-hmm.
But look at what happened recently with broilers. And to this day, we still don't fully know exactly what happened with broilers. But if it is that it is something against, the whole regulatory framework, if it's something illegal that really and truly went on and so on, as
Mm-hmm.
everyone else is speaking about and everyone else is speculating,
Mm-hmm.
would you still be married to their stock? Right. And so there comes a point where you have to be a wagonist, because it's your money and you have to protect your own portfolio.
Mm-hmm.
I'm not saying sell broilers, because this could be a dip, and maybe they come back from it. Maybe it really was nothing. We don't
Mm-hmm.
know as of today. However, it's something you always have to be reevaluating, and that's something I
Mm-hmm.
don't agree with certain people, because people will say, "Yo, I'm never gonna sell this stock," or "I'll buy this stock because they pay good dividends." Blah blah blah. Businesses go through ups and downs all the time, right?
Mm-hmm.
You can never, with 100% certainty, predict those ups and downs. Like you
Mm-hmm.
can't say this unless you're in the business, right? But you can't predict
They still
that
can't
with
predict it to it full 100%, even if you're in the business.
yeah, exactly.
Yeah.
I'm pretty sure even the broilers businessmen couldn't predict this.
Mm-hmm.
So, it's just one of those things where you have to always go back down to understanding, why did you buy this stock? What was the goal, right? And if the goal is really and truly 5 years, if it is like a 5 to 10 year goal, then you have to be reevaluating. Maybe
Mm-hmm.
quarterly, you look and say, all right, what's going on with the business? Everything good? All right. Has anything changed with my strategy? Is the business still doing what I think it will do? Are they still heading in that direction? Yeah. All right, cool. Next quarter, I check it back again. But I wouldn't just buy a stock, leave it, forget about it, and say, oh, this is 10 years. I go just hold this for 10 years and see where it goes. I don't think that's the safest way to invest at all.
Mm-hmm.
Um,
Do you have any? Are you? Well, you said your last one was. Wait, I'm just mentioning the question you asked me earlier. You said when was what was it? When was my last? No, you had asked me about day trading.
mm-hmm.
I just was thinking if you had asked me short term, because I did do, I guess, under the definition under 1 year. I did buy a stock and then sell it within under a year. But what I'd
Yeah.
say is that even like you, for example, you can even balance your portfolio, so you can have most of it in long term, like things that you're like, hey, for the next year, or the thing I expect to happen is not going to happen maybe until 9 months, 12 months down the line. So that would be considered by some definitions long term. Because like I have stuff that I've been buying, stuff I bought from like last year and such, and I knew that I thought they were undervalued, and I saw the things that I thought would happen. Couldn't necessarily say exactly when they would happen, but I was like, okay, there's going to be certain rough timelines, and I expect these things to happen. So I just buy it from now, because that's the thing. Like what one of the benefits, especially depending on, I guess, how your personality is. I prefer to be early than late. So I realize that I prefer to be early than late. So I'm just gonna buy it. Yes, I could technically squeeze it and do this and do that, but like at the end of the day, I don't really want to have to be putting in as much time, because then that's a big pro, I guess, for things that you're gonna hold for over a year, because you don't have to go on, log on, click buy, click sell. You can just
Agreed.
buy it, do other things. Yes, you should still be researching, but you don't actually even have to log on to the platform, buy it, sell it, whatnot. And yeah, I guess we will. Yeah, I think that's any other points you wanted to put
No, I
across.
think it's a good strategy, because even that way, you're also diversifying like the risk, meaning you're kind of spreading out the risk sometimes when you're in certain things early. it is highly unlikely for it to go. Like, I'm just assuming that the reason you bought this stock, let's say it's one of the stocks that you're talking about in your portfolio. The reason you're buying this stock is because you're expecting a certain thing to happen for the stock to reach a certain price. Let's say you want it to go up by 50%, and you can't exactly time when that would happen, but at some point it's likely that it will happen. So you're buying from early, and you may be, dollar cost averaging, you may just be holding this stock until that event happens where everybody else realizes, oh, this is a gem, we should also buy this too, and then sell to them. Right? And that's a good way, in my opinion, of diversifying, or at least, mitigating your risk, because you can have part of your portfolio in a stock like that where you may not know the time, but it may not be tomorrow, and it may not be next week. Right? Let's say it was like Wigton. Let's use Wigton as an example. Wigton won the bid for the I think it's about 50 megawatts that they want to be able to execute that project. Wigton right now is trading at $1.20 or something like that. And it kind of has been hovering around there. I can't remember what exactly the price is, but currently their current maximum capacity is 60 odd megawatts. So that, okay, eventually when that 50 megawatt plant is built, their revenues could increase by X amount. But you don't know exactly when it's going to be built. They have to raise capital for that. They have to actually start building. You're going to see costs. Expenses may go up XYZ in order to build out this plant for them to actually start making the money. So you don't know exactly when that's going to happen, but it's going to happen because they've won the bid, right? So it makes sense to be able to buy something like that from now. Now, this is not stock advice, guys. We never give stock advice on this channel. This is just our opinions only, so not financial advice. Big up and link up whichever financial advice you guys have at home. However, when you think of a stock like that, you would be more comfortable sitting in something like that. So you could be dollar cost averaging that stock, or look for maybe a shorter term play. And at that point, you say, all right, that's a good way to balance out my portfolio, because I have this one stock that I know will get here at some point, hopefully. So might as well just dollar cost average this long-term stock, quote unquote long-term, right? And at the same time, find maybe some other short-term plays with maybe less money. It's a good way to kind of balance out the portfolio, to say, all right, going to be using some of the profits maybe from these short-term plays. Maybe you have quarterly plays that you're going to make, and you use the profits from those quarterly plays to reinvest in this long-term play, because you really and truly believe that this long-term play will give you 100%, 50%, 200%, whatever the percentages gain. You know that this is probably sure, so you can take that risk doing those 10% plays in short periods of time, those 5% plays, whatever that percentage play is in that shorter period of time, because you balanced your risk like that. So yeah, it's not a bad strategy, and I do agree. As from the starting of the video, we said the best way to invest is somewhere in the middle. I guess for us, it's somewhere. It's a hybrid approach where we do take some aspects of long-term investing, and we do take some aspects of short-term investing. And that's how we recognize value. So yeah. Yeah, that's my 2 cents on the short term versus long term thing. I don't think you have anything else you want to say, Preston, to the people them. Just to subscribe. If you guys love this video, we'd really appreciate that. Yeah. Like it if you guys like it. Share it with a friend. All right. Let us know what's your investment style in the comments, because we would love to hear. Right? I over the years, our style has changed. My style has changed over the years. So I'd love to hear, what do you guys do now? Are you more of a long-term investor? Tell us why. Because, I foresee that the reason I've shifted closer to long-term is just time. I no longer have the time to be able to look at that. And a lot of our watchers are probably really busy people. You guys probably have lives, right? More lives than us, because we're here just chilling, making this video for you guys. So, but if you guys love this video, please subscribe. We have a goal of 5K likes by the end of the year, so we'd really appreciate it. Thank you so much for watching the channel, and like always, Limitless out.
Peace.